Let me quickly talk to you about how to get a colossal EIN only startup business loan with fair or poor credit and 100% approval. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing marvelous. I'm doing fantastic if you were to ask me. If you are doing as splendid as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about how to get a phenomenally large EIN only startup business loan with poor fair credit, 100% approval. It's very important to understand that when you have a startup business, or you have a very young company. In other words, the company is younger than 2 years. Then you're really thinking about a lot of things, right? You have no sales yet, but you need a loan. But you have no history to show that the loan will be repaid. So you have a very interesting catch-22 that you have to deal with, and it's not really easy, especially if your business needs a lot of cash to actually grow or even launch, and you're sitting around wondering, should I get funding from equity investors, debt investors, or should I just get a loan? The thing is that if you have bad credit or poor credit, your choices are not really that large. Your choices are limited. So you have to start thinking. And so this is really the conundrum faced by startup founders and owners of very young companies in this country. Okay. And so one thing you need to do is, this is why you need to have a proven methodology to go about, overcoming this challenge, go about overcoming this hurdle, and find ways to actually get the loan that you need, especially EIN only. And sometimes people think that you can get a business trade line very easy. No, because the thing is, you don't have the cash. You have to prove yourself you have to prove your company's creditworthiness, and so you can't get a net 30 accounts anyway. They want you to pay up front. So all of these things, all this constellation of problems, challenges, they really complicate things. Okay, and the only thing we say here is that you have to have a plan. It's important to have a plan. Now, there are three things you can do. You can say, well, I'm going to try to improve my personal credit score. In other words, if I'm in the 500 category, I'm going to try to move in the 600 range or maybe 700 range. The only thing is, we're talking here about FICO though. The only thing is that it takes time. It can't happen overnight unless you have a derogatory item on your credit score that's plumbing your credit score, and you can actually get rid of that very quickly. But it takes time. That's the bottom line. So that's number one. Number two, the thing here is that the business itself has no credit, has no business credit. So it takes time because you have to register with Dun & Bradstreet and go through all that kind of stuff. So that's the second element here of this trifecta. The third element is that you need to convince regular vendors to give you a net 30 account to allow you to pay 30 days after the delivery or 45 days. And all that also takes time, which is why you need, at the end of the day, to have a huge EIN only startup business loan. So let's get into the actual step-by-step. The first thing you need to do if you want to get a huge EIN only startup business loan with poor fair credit, 100% approval, is to get legit. So when I speak about getting legit, a lot of people think, well, I'm already legit. My business is legal. I have all the paperwork. Yes. But there are a few things that most entrepreneurs, especially the younger ones, not the younger ones, the people who have young companies or startups, there are a few things they forget. Everybody understands to be legit, you got to have EIN. That's not even on the table, right? EIN means employer identification number. You know about it. I know about it. You go on the IRS. You go on the IRS's website. You get it. It takes 5 minutes. Okay. Now you have to incorporate. This is where people make mistakes. Some entrepreneurs want to remain the sole proprietorship. You will never get a loan, a massive EIN only startup business loan with poor and fair credit if you remain a sole proprietorship. You have to incorporate. It's important. You cannot avoid it. Okay, so you got to choose, either you want to become an LLC, an S corp, a C corp, a partnership, but don't be a sole proprietorship. And you got to take care of taxes. And when I mean taxes, I'm speaking about a bevy of taxes, not just at the federal level, but also state and local. Very important. For example, income tax. You got to pay your state income tax, your federal income tax, your county income tax, if applicable. You got to take care of sales tax, sales taxes. Well, sales taxes are not it's not the company expense, but you have to actually get the money from your clients, get the money to the state. If you don't do this, you'll get in trouble. And also employer taxes, your FICA taxes, very important. You got to get all the permits and licenses. Do you know what the license you need for your particular business? It's not always easy. Sometimes people get audited and they're like, oh, wow, I thought I didn't need this, but do I need it? Yes, you do. So if you know your industry very well, the first thing you need to do is have an accounting of all the permits and licenses you need in your business to run the business legit. Of course, you got to have business bank accounts, credit cards if available. And last but not the least, you need to set up your accounting. You need to set up the accounting is the fulcrum. It is the foundation, if you will, of everything that will help you get the massive EIN only startup business loan that you're looking for, especially if you have poor or fair credit. Step number 2, you want to start building credit. If you want to have 100% approval the first time you apply for a massive EIN only startup business loan, you better start now having some kind of credit. And when I mean start building credit, it means that you have to tackle the issue both ways. You got to tackle it at the personal level, right? So you want to look at your personal credit, and then you want to tackle it at the business level. You want to look at your business credit. And when we speak about personal credit, we are speaking about ways that you can improve your FICO. We know that the top 2 elements that make up a FICO score are the amount of debts you have and your payment history, right? Payment history accounts for 35%. And the debt that you have accounts for 30%, I believe, something like that. And those two, you can see, amount to 65%, which is nearly 2/3 of your FICO score. So you got to take care of those. You got to have your FICO reports. If there is any issue in your report, then you want to fix it. You want to dispute it. You want to send dispute letters to any of all of the 3 credit bureaus, for example, right? TransUnion, Equifax, and Experian. And so you want to fix the inaccuracies. You also, at the business level, you need to start finding business trade lines and start small, folks. Talk to Quill, talk to Uline, talk to Granger, talk to Wise Business Plans. There are gazillions of vendors out there that will work with you. Sometimes you have to pay some fees, sometimes you don't, but you want to start paying and you want to build business credits there. Please also get a DUNS number. This is Dun & Bradstreet. This is a unique identification number that allows you to think of it as the social security number of DNB. And DNB is the top credit reporting agency for businesses in the country. And I mean, not just in the country, but globally, but it's important to have that. And to build credit also, you might want to consider secured business credit cards or loans for that matter. All right. Now, in today's conversation, we're speaking strictly about a massive EIN only unsecured startup business loan. Unsecured. Okay. You're not pledging any collateral. You're not pledging any personal guarantee. No, you just have to work. You have to follow the path, the step-by-step I'm giving you so you can get an unsecured EIN only startup business loan with fair or poor credit. The third thing you want to pay attention to here is to estimate how much you need. This is very important, and there are a lot of ways to do this. There are a lot of ways, and one simple way to do this is to create an operating budget. Okay, an operating budget is just a table. You can do it in Excel, or you can do it with software that helps you understand the inflow of cash or the outflows of cash, both ways. So this tabular representation allows you to understand exactly how much money you're bringing in and whether or not you can repay the loan, because at the end of the day, it's all about repaying the loan. So what is the loan amount you're looking for, my friend? What is the loan amount? Do you have an idea? You better have an idea. And you can't just like, oh, I need 100 G. Well, no. What for? Oh, I need $250,000. Okay, what for? You got to substantiate the reason here. You got to actually support the reason. And the thing is that, are you comfortable with having an unsecured loan? We're speaking about unsecured loan, right? But do you want unsecured loan, or do you want to collateralize the loan? In other words, you want to attach an asset to it so that the loan is collateralized, and if anything happen, then at least you have a way to like the lender also has peace of mind. They can sleep tight at night because they know if something happens, they can just they can repossess the equipment. And in estimating how much you need, you also have to think about the viability of the business, the viability of the business idea, your model, the business model. Do you have a proof of concept that is valid, that's been validated, right? What are you backing up your loan amount with? Do you have a business plan? Do you have a business pitch? Have you thought about some financial statements? Okay. You also want to think about, when estimating how much you need, you want to think about another thing, folks. You want to think about your ideal repayment terms, because this is going to affect the terms of the loan, because the longer the terms, the higher the APR, right? If you're getting a loan for 5 years, the APR you're going to pay on that loan will be higher than if you're getting a loan for 2 years in terms of maturity. So think about the amount, the term, the repayment plan, right? Whether you want to repay the loan weekly, monthly, daily, so on and so forth. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still teaching you today on how to get a huge EIN only startup business loan with poor or fair credit, 100% approval. And the fourth step here is to substantiate your loan request. So after you estimate how much you need to actually convince someone else. And that person is very important. That's the lender. Why do you need so much money? What for? And you can't just say, well, I need 100G because of, no. You got to prove it, and you got to back it up. You want to back up all the numbers you need, and you want to do it to the nearest penny. And there are two ways you can do it. Actually, there's a lot of ways you can do this. And all of them, you have to do them in Excel or through software, financial software, right? If you can use a QuickBooks, you can use a Wave, Zero, and so on and so forth. You can use templates. You can hire consultants to do it for you if you have no knack for preparing financial data, but you got to do it. The first element here is the business plan. The best way to actually back up your data, your loan request, is to write a compelling business plan, because the business plan will encompass all the information a lender needs to know to understand where your business has been, where it is going, and where it is right now, right? So you can talk about your mission, your vision. You can do some SWOT analysis of the market. SWOT stands for strengths, weaknesses, opportunities, and threats, right? So you have a way to actually get a bird's eye view of the market you're in and show the lender that you really understand what you're talking about. You understand clearly what you're referring to in your business plan. And a startup pitch is just an abridged version, a summarized version of the business plan. And this is kind of cool, because if a lender has 100 loan applications, they have no time to read your 50-page or your 100-page business plan, because the business plan has to be comprehensive. So a startup pitch is the best way for you to actually show a summarized version, and that the lender can read, and also you can present. If invited to do a live presentation, either through Zoom, conference call, or at a branch, you need to be able to back it up. So that's important. Also, think about your financial statements. That will prove to the lender how much you need. You can substantiate your loan request through the data in your financial statements. Okay. Also, sales projections, for example. This can help you, right? If you have no sales now or very little sales, you want to have a forward-looking statements, whereby you have sales projections that show the lender where you're going, what kind of idea you have. All right. And financial statements, by the way, must encompass the 4 financial statements. Don't just do 3. A lot of entrepreneurs only do 3. They do a balance sheet, an income statement, and a statement of cash flow. No, you need also a statement of owner's equity. This is important from a lender's point of view. Step number 5, folks. You need to find EIN only lenders for startups and very young companies, especially if you have a poor credit or fair credit and you want 100% approval. You want to speak to a specific category of lenders, and those lenders, and I'm going to give you list later on, those lenders really they specialize in helping startups and very young companies get the kind of loan they want, right? So this is really important to speak to those specific lenders. If you waste your time speaking to some lenders that are not interested in your business or they don't want to take that risk, then you're wasting your time, really. Okay, so you need to know the lender's requirements in advance. So if you're trying to find EIN only lenders for startups, you need to know the lenders requirements in terms of your operational history, how long you've been existing as a business, the minimum revenue requirements, the industry specs. So the industry you got to be in, because some lenders don't want to work with companies in certain industries. This is just a decision for them. They probably maybe tried in the past and they get burned. So they're like, you know what, we're not interested in that, or it's just too risky or whatever. So you got to know their industry, the loan amounts, because lenders have some caps on the loan amounts. And you also have to have an idea of their repayment terms as well as the APR, right? And when we speak about EIN only lenders for startups, you have all kinds of lenders. You have a constellation of lenders. You have banks, you have credit unions, you have alternative lenders, you have online lenders, and you have private investors that sometimes offer hard money loans. Okay, and you also have to think about what types of loans are we talking about here. The loan typology, that's kind of important too, because an EIN only startup business loan is not just like an unsecured loan they're giving to you. There are other ways to get a loan without actually getting any cash directly, at least. For example, you have MCAs, merchant cash advances, where you get the cash in return of your credit card sales or your debit card sales. You have term loans. You have accounts receivable factoring. You have invoice financing. You have working capital. You have business cash advances, and you have equipment financing. So those are some of the standard loans, EIN only startup business loans that you have out there that could appeal to a poor or fair credit applicants. Step number 6, you need to know the best lenders for you. And we've done a lot of shows on this, and I'm going to give you a quick roundup of some lenders that we believe are great for you. And so you have Cash Bloom, and our score for this lender is 10/10. For us, this was a perfect lender when it comes to EIN only startup business loan with huge amounts. And they want you to minimum time in business less than 1 year. They require annual revenue $100,000 minimum, and borrowing amount you can borrow from $50,000 up to $1 million. Minimum time to funding 1 day. Okay, this is kind of cool. And then we have here Balboa Capital, and our score for this player is 9.5/10. Minimum time in business 1 to 2 years. Required annual revenue more than $200,000. The borrowing amounts will oscillate between $50,000 and $250,000, and this is kind of cool. Okay, and the repayment terms are a little shorter, 3 to 18 months. Then you have Amazon Lending, and here our score is 9/10, and you have borrowing amount less than $50,000 all the way to $1 million. Minimum time to funding 1 day, right? There are no credit score requirements though, but the thing is, you got to be an Amazon seller. This kind of loan is only available to an Amazon seller. So even if you have poor or fair credit and you want 100% approval loan, and you are an Amazon seller, you might want to try this one. This loan is EIN only. You also have FundWise, and our score for this player is 8.5/10, and here they want a credit score of 550. The borrowing amount less than $50,000 all the way to $1 million. Minimum time to funding 2 weeks up to more than 2 months. So it's a little I would say a little problematic here in terms of the funding with FundWise. But hey, listen, if you don't need the money right away, you might want to try them out. So the financing is available for qualified startups. Okay. And we also have Lighter Capital. Our score 8/10, and here the minimum time in funding. Minimum time in business, rather, it has to be 1 to 2 years. Required annual revenue $100,000. Borrowing amount $50,000 to $1 million, and minimum time to funding 2 weeks. Okay, and it's available it's an EIN only loan for startups and very young companies with poor or fair credit. Okay, the seventh and last step here. you really need to, in your mind at least, you need to think about compromising. What do I mean by that? Sometimes you might want a certain amount, and the lender might say, like, listen, we can't fund you up to this amount. You want $1 million? Well, we have studied your application, and we don't want to risk too much. At least for the first time, we want to give you $500,000. So be prepared to compromise. Be prepared to get a lower amount, because an underwriting decision is not something. It's not like I would say scientific thing. No, you never know what you're getting, right? But you want to get prepared. You want to do your best to get the maximum loan amount you want. This is why it's important to have the business plan, to have all the backup, all the data backup, or the analytical backup that you need to prove that you really need that amount. But be prepared to compromise for a lower amount. In some cases, they might ask you also for a partial personal guarantee. Not a full personal guarantee, because some lenders are also flexible because they want to work with you. But for them, it's all about risk annihilation, risk management, risk mitigation, right? So they don't want to have they don't want to suffer a default risk. They don't want to suffer from default risk. So for them, it's important to say, you know what, we want you to pay chain up to 25%. We'll give you the other 75%, but we want you to pledge collateral worth 25% or 10% or 15% of the loan amounts. So be prepared for that. Also, you want to be prepared for a shorter repayment term, right? Because the shorter the term, the lower the APR and the lower the risk for the lender. You know, if you're applying for a 2 years rather, for a 2-year loan, EIN only loan, the lender might be I think more likely to approve the loan than if you had asked for an 8-year or 7-year, 7-year loan, business loan. So think about that. Also, you want to think about co-borrowing. For example, if you have poor or fair credit, you might actually increase your chances of qualifying for the loan, for the EIN only loan, if you join forces with another borrower. Now, when we speak about EIN only business loan, we are speaking about credit that is evaluated at the business level. However, if your business is new, like very, very new, and you have nothing to prove, nothing to show off, then you want to think about co-borrowing or co-signing the loan. And also think about getting a loan from several lenders. So if you can't get the full amount from one lender, then apply with 2 or 3 lenders. You can apply with a nonprofit such as Acción, for example, or Kiva. There, you're not going to get a lot of cash. You probably get 50 to 100, in some cases 250,000 with Acción, but it's always better. You can think about credit unions. You can think about traditional banks, for example. All right, folks, this is it for today's conversation. I was talking to you about how to get approved for a massive EIN only startup business loan with poor or fair credit, 100% approval. And I spoke to you about getting legit, starting to build credit, estimating how much you need, substantiating your loan request, finding EIN only lenders for startups and very young companies, knowing the best lenders for you, and preparing to compromise. Very important. Thank you again for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.